What's up? What's up? What's up, everyone? Happy Monday to you. How you guys doing today? Hope you guys are off to a productive week. All right, my name is Jeremiah Davis, aka the Funding Coach, coming to you live for Monday Fun Day, where I explore business funding tips, business credit, business becoming bankable. Um, Tips for your small business to become bankable, access funding, build business credit, things of that nature. Um, and today's topic, we are talking about optimizing your business credit profile. Now, there's a lot of information out there, and it maybe some of that information used to work, but now we are in a different era of business funding and business credit, which we got to transition from the business credit to becoming bankable because business credit does not equal business funding, right? We say this all the time. You need all the pieces to the puzzle to become bankable. Business credit is one piece to the puzzle, okay? There are other pieces to the puzzle that will make your business bankable, where banks want to give you money in lines of credit, business lines of credit cards in your business name, no PG, accessing corporate financing, SBA loans, business term loans, things of that nature. All right, large business lines of credit that you can use and tap into whenever you need to. If you are not bankable, you're not going to get the premium loan products that you need for your business. As simple as that. Okay. So, what are all the aspects of building your business credit profile? This is what we're going to cover today. I'm going to go into the software, right, on Business Funding Now, and I'm going to show you our whole section of how we automated and put the steps in place so you can optimize your business credit profile or just optimize your credit, right? Because personal credit and business credit are both need to be um, utilized to access the premium loan products. Now, yeah, once you get to a certain level, when you're considered maybe a medium or large size business, which is 50 to 100 employees or a certain dollar amount in annual revenue, then you can move up to the next tier where you don't have to PG anything and your business can function on its own entity. But you have to have the business has to have the resources and assets to access those higher tiers of fundability. Okay, um, so that's what we're going to talk about today. I'm going to go through step by step, well, all the little steps in optimizing this. Okay, um, and I guarantee you that the things that we're going to cover today that so some people may not know, maybe a majority of people may not have known these things are considered in becoming bankable. So pay attention, get the replay, go to the YouTube channel, like, follow, share, all those things. Okay. Business Funding Now on YouTube or Business Funding Now Facebook page. If you're a Business Funding Now affiliate, there's a Funding Now affiliate group, private group you can also access. Okay. So let me go ahead and jump into it right quick here. Boom, boom, and walk you through the things that you need to do to become bankable. But we're just talking about, I'm just taking one topic at a time, right? So this week's topic is optimizing your business credit profile. Okay, so I'm in the dashboard in the client portal, right, of the software. So if you go to Business Funding Now and you complete the success scan, right? Let me see if I can pull that up for you over here. So you can go to businessfundingnow.com and you can click on this first button, free business funding and credit scan. That will lead you to the next page where you can action. This is free. This is free. I'm not asking for anything here. Click on get your free scan here. And you're going to complete this quick little questionnaire, but automatically you'll get emailed the username and password, and you'll get the results of your scan. And the results of your scan will show you areas of your business that need to be addressed for optimizing your business credit profile, as well as pre-qualify you for one or more of the 21 different loan products that we have that we offer in the software. Okay. We supply 21 different business loan options. There's a wide range of options. I can show you over here really quickly. So we got funding programs, business credit cards, business term loans, credit union loans, equipment financing, merchant cash advance, revenue-based, SBA, signage, truck and utility vehicle, unsecured financing, 401k, ERC, equipment sale leaseback, purchase order, real estate notes, receivables, and settlement payouts. So those are all the funding products, and we're going to be changing some and adding some here in the near future. Okay, but this is not what we're talking about today. We're going into the compliance area, right? Last week I covered lender compliance. Here are 20 items in lender compliance that you have to get. This is your business credit foundation, right? Your entity filing, your business location, have a commercial location, virtual office or real office, right? Phone number, having your business phone number registered with the 411 National 411 Directory, having a website and a professional email, right? You having your EIN, any applicable license that you need for plumbers, electricians, attorneys, accountants, things of that nature. All right, your bank rating score, right? Your NAICS and SIC code, having the right SIC code or NAICS code that a bank is looking at this to identify your industry type. And previously, a lot of people just use a mixed match of relatively similar NAICS codes or SIC codes. But now banks are kind of getting honed in on this because people have been using them irresponsibly. Let me just put it like that. You got to use the right one and can say what that right one consistently. Okay. Business plans, assets, UCC data, corporate only filing, bank rating, comparable credit, and CD business loans. All right. Or business lines of credit. Okay. So we covered that last Monday. If you want that, go to the YouTube channel and pull that and you can watch that. But this week we're going into optimized reporting. So we have business credit and we have owner's personal credit. So I'm going to go through these tabs briefly, maybe a minute or two on each one to explain them. But if you go to the scan, you're going to get access to the funding and the first 7 steps of lender compliance for free. So you can pre-qualify for one or more of the 20 different business loans in the access funding section, and then you'll get this first up until this area here for free. You can get these stuffs out the way, no cost to you. This is all free. If you want to move on, then you would have to become a paying client, and then you have access to the rest of the software. So the next step is optimized reporting, online analysis. If you're a serious business owner, you have to have a strong online presence. Why? Because lenders and creditors are looking at these things now. If you got a weak website, a weak social media profile, inconsistent posting and things like that, they're not gonna take you as seriously as you do have these things. You have to have a strong web presence, and that's what this online analysis helps you do, right? And then you start accessing building business credit, getting the trade lines and vendor accounts that you need to start building your business credit profile. Then you got to organize your finances, business and personal finances, and then you start becoming bankable. All right, these are the steps in becoming bankable. All these are the pieces to the puzzle. They all need to be completed, and you need to have them to maximize your fundability, to maximize your limits on credit cards or business lines of credit, and different types of loans and products like that. Okay, so this is what we're going to cover today. We're going to cover optimizing reporting. Okay, so the first step here, you got to understand what this is. Business credit, right? So we're talking about business credit. So as soon as you click on this button right here, business credit, we're going to explain this to you, right? And there are 15 business credit reporting agencies that report business data, business financial data, business credit profile, right? The most popular ones are Experian, CreditSafe, Experian, Equifax, and DNB. And the reason why, because most vendors and lenders report to these, but these are not the most important credit reports, all right? If you are in a niche market, say food service industry, transportation industry, construction industry, there are other business credit reporting agencies for those niche markets that you need to investigate, okay? And you need to make sure you have your business credit profile set up with them if you are in one of those niche markets. All right, these are general ones and the most popular ones that are being reported to. And we tell you this right here, okay? All this, right? Experian is the most popular. open and accessible. You can easily buy your report online, and there is no fee to setting up your profile. Experian Smart Business Reports is used by many credit card companies, vendors, non-traditional lenders, and banks. Okay, now you have Credit Safe. Credit Safe is the largest worldwide business credit reporting agency, relatively new in the U.S. market, but already has over 100,000 or 10,000 credit providers. 10,000 credit providers. These are 10,000 entities that report to Credit Safe. The providers utilizing their business credit report to make approval decisions, critical in having yours up to date. So you want to make sure you have your credit safe up to date as well. All right, Equifax Business. All right, Equifax also allows business owners to purchase a copy of their credit report online, but it's typically the most difficult to establish a credit file. This is because they require an on credit providers who would report your payment history are, are less open. So they're a little bit more difficult to work with, but you can do it. Okay. And we provide the resources on each of these steps. Well, I'm going to show that to you in a minute. And then we got DNB, Dun and Bradstreet, assigns businesses a DUNS number along with some community business lenders and underwriting. DNB is used by many vendors to determine if they will extend your business a net term, and landlords use them to approve office leases. So you see how each of these bureaus have their specific uses and why you need to have all four of them as a minimum. Your business profile set up with all four of them as a minimum. Okay, so that's the first step. We're going to educate you, right? And we have this wonderful little video avatar that explains these things to you. Okay, so you're not in the dark, searching around trying to figure this out. We give you all the steps and the resources to complete these steps in the software. All right. So first thing we want you to do is check your status. All right. So we click on this, right? And then we give you some more information, right? So when you complete the scan and it pulls up your business, it's going to pull it up as and any other related businesses or businesses with similar names in the software. Our software, Success Scan, checks about 150 other data points that are public record and brings that in. So if there are multiple similar name businesses, it will list them here and you will choose the one that is yours to move forward, right? And it also will, if you have any existing trade lines that are reporting correctly, it'll find those as well if you have a business credit score and so forth, okay? But trade lines, we're giving you education on that, credit score, recent inquiries, all these things come into play, right? And you need to be aware of these. You got to be a serious business owner, I'm telling you. All right. This fly by night, fake it till you make it type thing. You got to be intentional when you're doing this. If you want to really you want your business to grow and access the funding resources that are available to all businesses, this is what you need to do. Okay. So we got that. Now we're going to go to Experian Business. All right. Experian Business. Here you go. Right. This is where you can fix errors on your business credit report with Experian. Okay. If you need one, you can go get a copy of your report right here. You don't have to go figure this out. We provide you with a direct link and access to this information, right? So you don't have to, and when you click on this button, it takes you directly to Experian Business, right? And now you're going to see Experian, smallbusiness.experian.com. So you're going to put in your information and you can get your report, okay? Simple as that. You need to know where you're at and make sure everything on your Experian Business report is accurate. Okay, because really, this part of is unregulated, and it could be a mismatch of names, similar business names. It could be something you forgot about that could be reporting as derogatory on your business credit report that's hindering you from getting approved for lines of credit and some funding products as well. So you really need to follow these instructions. Okay, so all right, and then we go to the next step. Now, this is like I said, this is part of the process. And when you can do this on your own, or you can pay for a live coach. You're paying for a live coach. If you want a live coach, you can pay for that, but you can really do this on your own. This is how we designed it. So it's very easy. It's simple for everybody to understand and follow the step-by-step instructions to do that. All right. Literally, you can do each of these steps in probably 5 to 10 minutes and then keep it moving. Okay. Next, we have credit Safe report. Okay, we provide you the link. Get a copy of your Credit Safe business report right there. Submit a support ticket to Credit Safe if you have errors on your business credit report. We're telling you, Credit Safe rating score businesses from 0 to 100 on a scale where 70 or higher indicates a low risk of default on a credit score. If you're under 60, identifies the business as high risk of default. So you want to make sure your Credit Safe score is a 70 or higher, right? And if you have errors, you can fix those errors. We're providing you the resources to do this, okay? You don't have to guess anymore, all right? Click on this, take you right there to the resource to get your credit safe, all right? Now, you can type your information in here and then X out, and within an hour, somebody from Credit Safe is going to be calling you and try to sell you a credit report, okay? But they do have a free trial, all right? So, um, I mean, it's pretty straightforward. I don't know what else we can do to make it any easier for you. Okay, but this is information that you need to be aware of. This is information that you need to be familiar with, and how to utilize it the proper way. If you're not doing that, you're kind of trying to do this thing with one hand tied behind your back. Okay, but you got business leases, commercial credit cards, letters of credit, lines of credit, open ended lines of credit, term loans. These are the type of things that are reported to Credit Safe. All right. Then we're going to go down to Experian. Okay. Equifax business, same scenario, right? If you have errors on your Equifax business report, you need to contact Equifax by submitting this form. Okay. Accessing your Equifax small business report, you must call 1-800-727-8495. The online search has been disabled in March of 2020. On the phone, they will let you know if your business report exists and provide you with a free copy. Okay, so this is down. All right, but when it's back up, we'll be having the link there and you can call here, get the free, or you can do it by mail. So you're not guessing. You're not guessing. This is. I just seems like a lot of people are trying to do this and they're not utilizing the basic common knowledge information to do it. And it's a little frustrating because I get calls every day from people talking about, I got this on my business credit. Can you fix my business credit? Or how do I got 80 on my paydex score or intelligence score, and I want $250,000. You're a long way off until you do your homework. Okay, you got to do your homework. Okay, but like I said, every step we're helping you understand how this works and giving you the resources to complete the step. First thing you always want to do is make sure you have these reports, right? And if there's any errors in the reports, go through the process to fix those errors. All right. Then we're going to go to DNB. Okay, run a search on your business. You click right here and you can run a search on your business for DNB. All right, DNB compliance items. You got to have a DNB report, right? This is showing you exactly step by step what you can do. You can view and update your business profile at any time for no cost. There you go. Okay, so if it's not reporting accurately, if you have trade lines that are not reporting, this is how you gotta deal with that. Nobody else can do it for you. Now you can pay somebody to pretend like they're you, and they'll call and they'll go through the most. I know how pre-pandemic people were doing that. I'm not going to do that. All right, this is your business. It's your responsibility. I'm giving you the resources and the tools to do this for yourself, and it's going to save you money. You don't have to pay someone to do something that you can do. Okay, that's the bottom line. All right, if you're lazy, yeah, don't. I'm not lazy. I'm way too busy to be hand holding you when I provide all the resources for you to complete these things in the software. All right. All right. Then your business credit scores. Okay. Know your business credit scores. Experian Intelligent Plus FAQs. Learn more. Right. Then we got Equifax Small Business Risk Report, and so on and so forth. So we're giving you that information here. Right. If you got an 80 intelligence score, you got an 80 on a Equifax and DNB a paydex score of an 80, you're doing really well. You're doing really well, but that's not all that you need. Okay. Now, another thing is personal credit. That's why we're going down here. See, what people are not telling you is most lenders are still going to do a soft pull on your personal credit to see if you have less than a 680 on your personal credit, you're going to be knocked out of the premium loan products. All right. Now, these things don't report to your personal credit. They're a soft pull on your personal credit, but they still use this to judge you or if you're going to get approved or not. So you can make $100,000 a month and have a less than a 680 credit score, and you still have to go get a revenue-based loan or a merchant cash advance loan. But if you had a 680 or higher on your business, on your personal credit, and an 80 on a Paydex Intelligence score, now you got more funding options, more lenders you can go to, and there's other like you can do the business credit cards, you can do business term loans, you can do business lines of credit, things like that. If you don't have that, then you can't access those funding products. As simple as that. All right. If you don't have good personal credit, then no, some of those funding products are not available to you. Simple as that. Okay. Easy peasy. All right. So we are on, okay, owner's credit. Here we go. All right. Personal credit optimization for business lending. What business lenders are looking for in personal credit. All right. Bam, 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 right here. Right. So, well, of course, a 720 is better than a 680, but a 680 is the minimum. All right. And they're using FICO 8 credit scores. Right. So, look, FICO 8 credit scores are used by 90% of business lenders. There are many credit scores offered to consumers, such as Credit Karma, Bonded scores, etc. Misleading, and they may be misleading you, thinking you have a better credit score than you have. But when it comes down to business loan approvals, they're checking the FICO 8 credit score. Right? If you're a business owner, you have partners, you got to have at least, they say 15 to 20% ownership but if you have 20% ownership, somebody else has 20% ownership, at least 2 or 3 of you guys have to come together and have 51% ownership to get to sign off on the loan. Or all the other partners will have to sign off on the loan, right? More like a S corporation with a board of directors where everybody has equal shares or, something like that. But my point is, whoever has the best credit on a FICO 8 scoring model, right? This is who needs to be applying, right? When you're looking for personal credit reports, business lenders typical top 10 items. So we're telling you right here, bam, what's the criteria that they're looking for? Okay, debt obligation, right? Utilization, DTI, 45%. All right, large debt acceleration or too much new debt in the last 6 to 9 months. If you got too much debt in the business, you can't service any new debt. Okay, so you need to have that under 45%. All right, how many new, it must have at least 5 to 24 rules or no more than 5 new accounts open in the last 24 months. They don't like it when they see you shopping around, right? If you're doing one of those credit card stacking or loan stacking programs, if you've done it, you're shot in the foot for at least 12 to 24 months. You cannot go back in for another round of funding like that for at least 12 to 24 months. All right. There are funding products you can access still, but the premium stuff, they don't want to see a whole lot of new credit and new funding on your credit report, on your personal or your business credit report, because they want to make sure you can pay the money back. That's all. They're mitigating the risk. That's it. They don't want to see that. Okay. All right. Most are very sensitive. Recent credit inquiries, too many inquiries, right? We say 3 and 90 days or 4 and 6 months is the benchmark. Don't have more than 4 new inquiries in the last 6 months if you want to qualify. Okay. Is your personal credit identity information in order, consistent across all 3 credit bureaus? That's why you need to have your cursor, because if you have errors or mismatched data, there's everybody's credit report has errors on it. So I haven't seen a credit report yet that didn't have some errors on it. All right. Large credit limits, they want to see that other financial institutions have trusted you. That gives them a warm fuzzy that they can trust you too. Okay. Personal DTI under 40%, no open collections, unpaid charge-offs, judgments, tax liens, or legal filings. And lastly, no 30 or 60 or 90-day lates in the last 24 months. Last 2 years, no lates. Usually, if it's more than 2 years old, it has less validity and credibility, and you can still get approved. but ideally you don't want to have any lates on your credit report. Okay, so integrate your credit report. You can import My Score IQ Business, My Score IQ. I'm sorry, My Score IQ Business Model. That gives us a 3 bureau FICO 8 score and 2 business credit scores, which is Experian and DMB. That report can be imported into the software. Okay, and you can click here and we'll take you right there, right? We'll take you here. If you don't have it, you can get it here, click there, and then you come back and you add your credentials here, and then import the MyScore IQ business model into the software, and it's going to be a more accurate success scan on those business qualifying you or pre-qualifying you for one or more of those 21 business loan products. Okay, so we got it all right here for you. Okay, so we got the integrated report. That's what I just showed you, right? And then we have your displayed report, right? There's no report here, so there's nothing to display. All right. Then you have your FICO and your business. Okay. So here's the one little thing I think a lot of people miss on FICO scores as they apply to business lending. Okay. Remember I said 680 right here, FICO 8 model. This is explaining the whole everything you need to know, right? Typically, the system is used for small business loans of $350,000 and below. For small business lenders, it's still all about your degree of risk and default being very low, moderate, or high. The FICO score ranges from, right? This is the FICO small business score, or SBSS score. Small business FICO, or it's the same thing. All right. Minimum score for the SBA, right? Because it's a combination. This score is a combination of your personal credit and your business credit. Okay. And how they calculate that, right? So the small business credit FICO score is 0 to 300. Okay. But basically, you need to have a 70 or higher, and like like I said, 680 or higher, or 700 on your personal credit score, and then they combine those and they come, and the minimum you need to have here, it says a 160 on the SBS score, a small business FICO score. But we can go 155 minimum one, but 160 or higher, then you should, if you got everything else in order. Now, why is that so important? Because this is the small business FICO score is the credit score the SBA uses or pulls in approving you for SBA loans. Now, the United States government uses this credit score, and the SBA is the one who is approving those SBA loans, right? The SBA does not lend money, but they guarantee up to 50% of the loan. If you default on it, then they're going to pay the loan back to the lender. But so an approved SBA lender is going to follow the SBA guidelines, right? So you got to be approved with the lender, and then when they pass their approval, they'll send it to the SBA. The SBA send them back the results, and if everything's copacetic, then you get approved for the funding. But if the lender doesn't approve you, the SBA won't approve it. So I can tell you right now, if you don't have this, the SBA is not going to approve you, so the lender is not going to approve you. Simple, right? But this is the page, one pager with that information here. Now here we're talking about, removing the freezes off your personal credit report, right? But putting for the data furnishers, you want the freezes on there. So if you have to dispute something, the credit bureaus cannot verify that information from the data furnishers. If you don't know nothing about that, I'm sure you can find somebody talking about it on YouTube, or give me a call, what have you. And then here's a free MyFICO booklet that you can download as well. So we want to educate you on these things so you know how to get approved before you apply. Okay? You want to make sure that you are qualified and get approved before you apply. Because everybody knows, you go apply and get denied and you think you got everything in order, but they are not required to tell you why they deny you. We're telling you this is why they're not denying you, because there's something on your personal or your business credit report that's determined to them you are high risk factor of default, point blank. Okay, so now we got personal debt. Having personal debt, your personal DTI under control. All right, you need to have that. Do not estimate your revolving debt amounts. All right, you got to click here, get a free report. Okay, but we're looking at revolving installment, mortgage, and other loans. Right, you need to be under 45%. Quite frankly, right now, the Feds and the interest rates, I would push this down to 40%, 43 tops, but you're safer under 40%. Okay, now, does anyone owning 15% or more of the business have revolving debt? Credit history that's 5 years or older. That new stuff, the authorized user lines and fictitious business trade lines, don't do that because two things, right? If you obtain credit and finances on the false pretenses, that's a crime. Okay. All right. Not that you see a lot of people going to jail for it, but you don't want to even cross that road. You don't want to put yourself in that position. Okay. So we're not going to tell you to do that. You can do it the right way. All right. There are no shortcuts. Let me put it like that. All right. You're not smarter than the banks. You're not smarter than the government. You know, don't I mean there's no I mean I know there's people out there doing it and some people getting away with it. They only want to get away with it for so long. But why go through all the trouble to do it that way when you can do it the right way and sleep at night? That's just me. I'd rather sleep at night, not worry about the feds coming knocking on my door. Okay. All right. And knowing your debt to income limits. Okay. So everything is designed to educate you to do the things the right way. Okay. Do the things the right way, understanding how lenders are looking at things, right? Debt to income limit ratio, how to figure that out. You want to keep that under, like I said, under the 40% mark. So you can that if you're not, then you're increasing your risk factor. As simple as that. It's not personal. Everybody wants to tell their story, explain why this is this way and this is this way. The banks don't care. They don't care. All they care about is how much risk are they taking to get their money back. That's all they care about. You can't tell them your story and try to explain to them and pull on the heartstrings and stuff like that. They don't care. Okay, it's yes or no. And quite frankly, a lot of the people at the bank don't even know this stuff. All they're doing is typing in data into the computer. The algorithm is telling them approved or denied. Who sets the parameters on the algorithm? The people up on the top floor, the people who are making decisions, the people on the phone, and the people that you're talking to, they don't have the education or they don't know the reasons why. All they know is the computer said denied. That's all they know. Okay, so you asking somebody why you got denied, and they can't give you an answer because they don't know. All right, inquiries and identity. Okay, there's so much identity theft out there. I can't tell you how many times people have submitted false information to me, false manipulated bank statements, whole line of things, right? Now, I don't have the technology to spot false bank accounts or bank records or bank statements, but the banks do. They have, I mean, the fraud industry is a multi-billion dollar industry. And these banks and these institutions have put the things in place so they can catch this stuff, immediately. That's a part of what Plaid does in any type of banking integration, so they can see the real raw data, right? So keep that in mind. All right, and then using credit partners, right? Now, some lenders, and we do this as well, will allow you to use a family member or somebody as a credit partner that has good credit. Now, if it's in the business, now that person has to be on the articles of incorporation. Okay, for you to use them. On the personal side, it can just like a co-signer. But point is, and I really don't recommend using a credit partner if you don't have to. If you're in a tight spot and you don't have any other choice, maybe. But otherwise, I would recommend not using a credit partner if you can avoid it. I've seen too many relationships between family members, mothers, daughters, fathers, sons, best friends, siblings go sideways because of money. Okay, because somebody co-signed or used as a credit partner, other party defaulted, and now the credit partner is on the line on the hook for the debt. Okay, authorized users, we got to stop doing that. Okay, I know there's people out there selling it, and a lot of you guys believe in it, but it's technically borderline fraud. Okay, like I said, you're saying that you have this trade line and you're an authorized user, but the algorithm just populates and approves you based on what they see on your credit report, and then it come to find out that it's not even a real trade line that you legitimately got in your own name on your own merits, then it just causes problems. So I advise not to do that when you're doing these type of things. And quite like I said, you got to mitigate your risk factors. You got to present yourself as a low risk to a lender or financial institution to get these products and services, lines of credit, business credit cards, lender accounts, bank loans, things like that. We don't want that. And then understanding what the UCC one is. All right, if you've defaulted on any funding whatsoever, it's going to be attached to your business and might be attached to your personal, depending on the contract that you signed with that lender. But if it's a negative on your business credit profile or UCC one database, you're going to get denied. Okay, so that's it. And the only way you really can get around that is start a whole new entity from scratch with a new EIN, new business name, all that stuff. You can't even have the same phone number or same address. Okay, I mean literally anything. I mean if they match 2 or 3 different points of data, name, address, stuff like that, business name, EIN, something like that. All that data is on the report. Okay, and you can so you got to be careful about that. But anyway, so that's all I'm going to cover this week on that. Next week we're going to look at online analysis. All right, but and this is all this series that I'm doing right now is how to become bankable. All the steps you need to go through to become bankable. Right, just work your business, do the steps, and if you do them consistently, correctly, in 4 to 6 months, you can be bankable. You can have your business credit built to a point and have all the other resources built to the point where you can go to a bank and get 100, 200, $300,000 a loan, lines of credit. Wouldn't it be nice to have a $250,000 business line of credit for your business to access? That's the cheapest money you can get. Why? Because you don't pay for it unless you use it, and you're only paying like maybe 3.5, 4, 5% tops interest on the amount you draw. So if you got a $250,000 line of credit and you say you pull out 20, you're only paying that 3.5 to 5% interest on the 20,000, and then you put it back, and then you do it responsibly, just like a credit card. They're going to give you increases, right? A lot of people use these for their real estate ventures, other different avenues. To grow their business, get equipment, hire more people, things like that, and then pay it back. Okay, there are other institutions out there now are giving a business line of credit with like a 650 credit score and 1 year in business, things like that, without having a business credit score populated. But usually they're going to max out around $50,000. You're not going to get more than that in a business line of credit. If you want more than that, you have to do the things that we're talking about, right? Like back in the lender compliance section here, one of the things you gotta be is have comparable credit. And how do you build comparable credit? With these business CDs. Now these business CDs, right? Here, I mean, we tell you how to get this. All right, here are a list of banks and credit unions to offer business CDs. Right here, right now, Bank of America is number one. This is secure. You got to get the first CD or business line of credit, basically business CD. Here they want $25,000 to open one, right? Here's some. Let me find a low one. Okay, here we go. You got one here for $5,000, right? Here's the thing with this. You get the first one secured, okay? Now you still have access to the money, right? So it's not like you're losing the $5,000. That is going to be accessible in a line of credit to your business once you get that, right? You're putting the money down, but if you don't, you're not going to pay any money for it to utilize it. I mean, if you utilize it, if you just leave it there, but you're going to leave it there because you're going to use that to get another CD that reports as a business line of credit that's unsecured. You do once those two start reporting to your business credit profile, then now you're going to go to another bank. Well, so you can go to 3 or 4 banks in 4 months, say 6 months, right? And you can have $150,000 in business line of credit because each one is going to be the same or more than the ones you already got. So that's the quick way, the legal way, the correct way in building comparable credit and accessing business lines of credit that you have it. Now you have $100,000 in comparable credit. Now you go to a bank and ask for a business loan for $100,000 with a business term loan with low interest rates and a monthly payment for 5 years, maybe even 10 years. Some business term loans go up to 20 years. Okay. So but this is the way you want to build it the correct way. And once you build it and you become bankable, you stay bankable. Okay, don't go back down. Stay bankable. Utilize these things responsibly. Pay your bills on time, and then your business will grow. Once your business has a good credit financial blueprint, uh, strong credit history, you get and strong financials, you don't have to go ask for money anymore. The money comes knocking at the door. They come, hey, you need some money? Hey, you need some money? Hey, you need some money. They try to give you money when you put yourself in the bankable category. Okay. Uh, Let me go back over here, see if I have any questions. No comments, no questions. Okay. Anyway, I hope that was good information for someone. Like I said, like, share, follow, and I'll catch you guys on Friday when I come to you with Black Label Friday. All right. My name is Jeremiah Davis. I'm the Funding Coach. Peace.